As President Kim mentioned, today's lesson presented in this video is about the tax system and the development of e-tax administration in Korea. This lesson will emphasize the development and current status of the tax system, as well as the remarkable history of innovation in e-tax administration, and finally, review the overall achievements. First, let's talk about the development of South Korea's tax system. Today, the world is amazed at the total transformation of the South Korean economy. Who would have imagined a country hopelessly devastated by a civil war would become the seventh member of the OECD's 30 to 50 club in the span of much less than a century? Moreover, in 2021, UNCTAD's Trade and Development Board unanimously decided to move the Republic of Korea to the developed country group. This is not only a historical moment for Korea, but also for UNCTAD, since South Korea thus became the very first instance of a country that successfully progressed from Group A to B since the establishment of the UNCTAD in 1964. From 1945 to 2000, South Korea was an aid recipient, and many of its social infrastructures were rebuilt through economic aid from abroad. To pay back what we owe to the global community, South Korea established aid agencies in the 90s and became the first recipient country to join the OECD DAC in 2009. South Korea's GDP in 2021 was $1.8 trillion, which is more than 1,300 times larger compared to its GDP in 1953. Moreover, the GNI per capita in 2021 surpassed $35,000, which is more than 500 times greater than the figure in 1953. This figure signifies that South Korea has attained the commonly acknowledged barometer of advanced nation status by achieving GNI per capita of more than $30,000. South Korea's economy shifted from aid dependence to fiscal self-reliance. After reaching a peak in 1957 of 52.9%, the share of foreign aid and funds in total government revenue decreased to 4% in 1970. South Korea officially stopped receiving aid in 1995. As you can see in the graph, along with economic growth, the establishment of the National Tax Service in 1966 was an important factor that contributed to the shift from aid dependence to fiscal self-reliance because it dramatically facilitated domestic revenue collection. Tax revenue, which is composed of the personal income tax, corporate income tax, and value-added tax, has been on a constant rise since the 1990s. It increased more than 17 times from 14.9 trillion Korean won in 1990 to 255.7 Korean won in 2020, despite the major financial crisis that occurred within this period. So far, we've touched upon the development of South Korea's tax system in the course of economic development. Now, let's talk more specifically about the current status of the South Korean tax system. In terms of tax structure, taxes in Korea are comprised of national and local taxes. Among the 14 national taxes, 13 taxes are classified as the internal taxes, which are imposed on people and commodities within the South Korean territory, and customs duties, which are taxes imposed on imported commodities. Local taxes are used for local government revenue. There are a total of 11 local taxes. They are divided into provincial and city or country taxes depending on the different levels of local government authorities, which are the taxation subjects. Moreover, these taxes can be categorized as ordinary taxes and earmark taxes, depending on the purpose of taxation. The purpose of an ordinary tax is to provide expenses for general government operation, whereas an earmark tax is for the purpose of developing. For instance, the educational environment or strengthening the competitiveness of agriculture and fisheries. Let's move on to tax agencies. These agencies function together to manage the revenue of the central government. Under the Prime Minister, there are 3 designated agencies for national taxes. Let's start with the Ministry of Economy and Finance. Under this ministry, there are the National Tax Service and the Korea Customs Service. The main function of the NTS is to supply the revenue base and ensure fairness in taxation. NTS collects the bulk of government revenue, and currently there are 907 employees working to accomplish its mission. The Korea Customs Service is comprised of 416 employees at its headquarters and 4,903 employees at its regional and overseas customs offices. KCS processes the customs clearance of all goods entering or leaving the country. Under the Prime Minister's Secretariat, there is a tax tribunal, an independent agency specialized in taxation. This exists to examine the appeals caused by dissatisfaction with the imposed national taxes, customs duties, and local taxes. Its goal is ultimately to remedy the violation of taxpayer rights. As prescribed by the Framework Act on National Taxes, the Customs Act, and the Framework Act of Local Taxes, there should be 6 standing tax judges, and among them 5 should be related to the national tax and 1 should be related to the local tax. For the non-standing tax judges, they should number less than 40, and at least 2 of them must be related to local tax. Next, let's look at the Korea Institute of Public Finance. It is a non-profit national research institute founded under the Office of the Prime Minister. KIPF is comprised of 371 employees who all work to investigate, research, and analyze the operation of taxes, public finances, and public institutions in order to support the establishment of tax policies and contribute to the development of the national economy. To manage the revenues of the local governments in Korea, the Ministry of the Interior and Safety was placed in charge of local finance and taxation. The ministry formulates policies on local government's fiscal affairs, conducts analysis for the promotion of sound local fiscal management, and supports affairs related to the operation of local state-owned enterprises. All local government agencies, which are the taxation subjects for local taxes, belong to the Ministry of the Interior and Safety. As of 2021, a total of 344.1 trillion Korean won was collected as national taxes. The personal income tax constitutes 33% of the total national income taxes, followed by 21% from value-added taxes and 20% from corporate income taxes. These tax items listed in the box account for less than 10% of the total of national taxes. As for local taxes, a total of 102 trillion Korean won was collected in the year 2020. Among them, the acquisition tax constitutes 29%, which is the highest share, followed by the local income tax, local consumption tax, and property tax. The tax items listed in the box accounts for less than 10% of the total of local taxes. When we look at the proportion of national tax and local tax, we can see that from the 1970s up to the present, the share of local taxes has increased gradually, and the latest record shows us that the national tax accounts for 73.7% while local tax makes up 26.6%. Let's take a closer look at the position of Korea in comparison with the average of OECD and G7 countries. In terms of tax revenue as percentage of GDP, South Korea is closer to the G7 level, and notably, when compared to 2010, the difference with the OECD average has decreased from 5.8 percent points to 4.2 percent points. Also, the difference with the G7 average has decreased from 5.9 percent points to 5.2 percent points. Similarly, for the tax to GDP ratio, both the gap between Korea and the OECD countries and the gap between Korea and G7 have lessened over time. Korea is catching up to the tax of GDP ratios of both groups. From 2010, the difference with the OECD has decreased from 9.2 percent points to 5.6 percent points. In the case of the G7 average, the difference decreased from 10.8 percent points to 7.9 percent points. The bars show the composition of tax revenue as percent of nominal GDP. As you can see, Korea is highest in CIT and property taxation, whereas it is the lowest in PIT and consumption taxation when compared to the OECD and G7 averages. Let's track the changes in the tax rates. Starting off at a level lower than the OECD average, Korea's PIT rate became higher than the OECD average, but it is still lower than the G7 average. In terms of CIT, Korea's trajectory has been more dramatic than in the case of PIT. Starting off as the lowest compared to the OECD and G7 figures in 2020, South Korea became the highest among the three, as it reached 27.5%. Ever since 2010, Korea's VAT rate hasn't changed. It remained at 10%, which has been consistently the lowest among the three. In terms of the share of local taxes in total tax revenue, among the OECD countries, federal countries tend to demonstrate stronger independent financial authority compared to the unitary countries, and this contributes to the relatively larger share of local tax among the federal ones. Since Korea being a unitary country, it shows a relatively lower share of local tax in the total tax revenue. The advancement of technology has highly affected South Korean tax administration. Now, let's take a closer look at the development progress of e-tax administration. South Korea is proud to be the world leader in e-governance. We have ranked in the top 3 times in the e-governance development index and 5 times in the e-participation index. Such highly developed e-governance set a strong foundation for the development of e-tax administration in Korea. History of e-tax admin began in 1997 and continues up to the present. Now let's take a look at these historical moments one by one. The Tax Integrated System, known as TIS, was established in 1997. TIS can be defined as an integrated database that connects all district tax offices into a single network that enables tax administration by function. The establishment of TIS was possible thanks to the Real Name Financial Transaction System, established in 1993, which provided a massive amount of taxpayers' financial income data. The main functions of TIS can be summarized into 6 areas. First, TIS offers tax-based management by managing taxpayers' information. Then, through the tax return filing management, TIS offers a selection of taxpayers subject to filing and cross-checking of documentation. Third, TIS audit management enables the selection of non-compliant taxpayers for audit. Through documentation management, TIS manages various tax-related documents. Notices, collections, and asset seizures are handled through collection management. Lastly, through its custom service function, TIS makes it possible to access certificates and business registration. Soon after the establishment of TIS, the restriction of the Special Taxation Act was further amended in 1999 to incorporate articles regarding income deduction for the amount spent on credit cards. The newly added articles allow income for amount spent on credit cards or its equivalent to incentivize credit card usage and reduce cash transactions. This was initiated with the purpose of broadening the tax base among the self-employed, as well as to ensure transparency in identifying financial transactions and strengthen tax equity. Ever since 1999, related developments have occurred regarding lottery for credit card receipts, rewards for reporting disguised affiliates, and allowing tax payment by credit card. Most recently, the lottery for tax receipts was abolished in 2011. After the amendment of the law incentivizing credit card usage, there has been a drastic increase of payment by cards, and in 2021, the total amount paid by credit cards reached 482 trillion Korean won, which is more than triple the amount in 2005. In 2001, an internet-based integrated tax administration service called the Home Tax Service was established. Ever since, the Home Tax Service has enabled taxpayers to file tax returns, pay taxes, and receive tax-related certificates at their home or office. The effort to develop such a system was initiated to mitigate inconveniences caused by previous tax administration system, which was based on tax payment notices by mail or in-person visit to tax offices. E-filing alone does not fully describe the functions of the Home Tax Service. In addition, it offers comprehensive tax-related services including electronic filing of tax returns, electronic notices of assessment, electronic transfers of tax payments, electronic issuance of tax-related certificates, access to past filing and payment records, and automatic calculation of tax exemptions. Then in 2003, the Tax Information Management System, known as TIMS, was established as a decision-making tool to provide analysis for the selection of audit targets and tax-based management based on accumulated tax data from TIS. As a result of using TIMS, investigation time has been reduced. Previously, it took more than a month to conduct an investigation, but now it can be done within a day. Also, TIMS achieved annual budget savings of more than 300 million Korean won in 2003. Lastly, prior to TIMS, statistics were derived from periodic reports from each tax office, but with TIMS, real-time statistics are produced without having to wait for the periodic reports. As part of the continuous efforts to broaden the tax base, in 2005, the tax receipt system was introduced. The cash receipt system was designed to transmit transactions through cash receipts by entering a resident registration number as well as the phone number of a customer. This system was designed to capture remaining non-traceable transactions, and the system functions through 3 channels. The first is a cash receipt card, issued by the government without cost, and the second is the resident registration number, and the third is the cell phone number of a customer. Ever since the introduction of the cash receipt system, the issuance of cash receipts dramatically increased, and in 2020, the total reached 4.1 billion cases, which amounts to 123 trillion Korean won. This amount was 6 times higher when compared to 2005. A year after the introduction of cash receipt system, a simplified year-end tax settlement service was made available. This system was designed to enable taxpayers to download and print out materials for their year-end tax settlement, including receipts from hospitals, schools, or financial institutions. There was a clear demand for simplifying the year-end tax settlement service due to the high compliance costs for both employees and document issuing institutions, as well as the high administrative costs for withholding agents. Then in 2010, the e-tax invoice system was introduced to enable online issuance and distribution of tax invoices, and its web-based transmission to the National Tax Service. These are the reasons behind the introduction of the e-tax invoice system. Previously, the compliance costs under the new transaction environment was high, with the increasing volume of transactions as well as the costs for preparing, storing, and reporting manual invoices. Also, there was a demand for enhancing the transparency of the tax system, and some difficulties remained in identifying tax evaders using false manual tax invoices. The demand for the digitization of the economy was obvious. At that time, the physical infrastructure and taxpayers' culture were already prepared for digitization. This was demonstrated by the fact that large enterprises started to issue tax invoices using enterprises' research planning or application service provider. In 2015, the renewed version of TIS, named the Neo Tax Integrated System, was established. It is the next-generation tax system that integrates all tax-related systems into one. NTIS is comprised of 2 main pillars. One is the next-generation home tax, which is an online portal tax payment service, and the second is the tax administration portal that integrates services for the employees of the National Tax Service. NTIS was initiated due to the need to modernize the TIS. Tax laws had been revised frequently to reflect more than 30 new systems introduced since 1997. In addition, the complex nature of TIS hindered the effective management of data, which in turn increased maintenance costs. All these served as a call for a fundamental reform to the system. Furthermore, the administrative and technological capability of South Korea enabled developing a large-scale project such as NTIS possible. The administrative and technological capacity includes 20 years of know-how accumulated by NTS, together with the matured IT system. The development of NTIS brought positive changes to taxpayers, especially for the general public. All tax-related matters can now be handled through a single website, and tasks that used to be manual have now become electronic. More types of tax-related information and certificates can be issued online, and the usage of mobile apps became simpler and more convenient. Moreover, NTIS Home Tax has been further renewed. The renewed main services include e-filing and payment, cash receipts, e-Sero, the National Tax Law Information Service, e-tax certificates, earned income tax credits and child tax credits, simplified year-end tax settlements, the NET's call center, and finally, the Public Service Corporation Disclosure Service. All these services made the lives of taxpayers in Korea so much easier. In 2019, the pre-filled service for tax returns was introduced. This service provides data for a total of 28 items necessary for tax returns, including credit card sales, which are filled in immediately on the online report. Moreover, the pre-filled service has been designed to fill in all the necessary information for filing a tax return in advance, allowing tax returns to be filed immediately after checking the main items of the report, which further increases the convenience for taxpayers as they can file tax returns without visiting the tax office. With the pre-filled service, pre-filled information is already available on tax returns, and visiting tax offices became unnecessary. This was also very helpful in preventing mistakes while filing tax returns. In the same year, the Big Data Center was established, which applies the big data method to the tax-related database. Establishment of the Big Data Center was initiated to maximize the usage of the materials for taxation, to establish a user-friendly filing environment, and to enhance the efficiency of tax administration officers by adding a future-oriented fair taxation infrastructure. Mainly, it offers the pre-filled expenses service starting from May 2020 and a chatbot service to answer the requests of taxpayers in real time. This service started in October 2019. As a result of the ceaseless efforts to reform the tax system and develop e-tax administration, we have achieved significant milestones along the way. Operating costs have decreased since the introduction of e-filing. The trends in e-filing of taxes serves as an indicator that the more we process the e-filing of taxes, the less the operating costs. VAT and global income tax availed e-filing the most among the 4 major sources of tax revenues. VAT e-filing has increased by 20 percent points, and it reached 94.9% in 2020. Moreover, global income tax e-filing increased by 17 percent points, and it reached 98.5% in 2020. Notably, the e-filing rates of the corporate income tax and withholding tax were relatively higher than VAT and global income tax from the beginning. Through the tax reform, transparency has been greatly enhanced and income deduction for credit card usage geared the direction of Korean economy into a cashless economy. The cash receipt system enhanced the transparency of B2C transactions, and even using the cash and e-tax invoice system not only enhanced the transparency of B2B transactions, but also the VAT-exempt B2B transactions. All these achievements can be attributed to the improved e-taxation system, which made it possible to track and cross-check the transactional information of businesses and individuals with credible electronic devices. One of the greatest achievements would be the broadened tax base. Since 2002, the total number of taxpayers has consistently increased by 98.7%, amounting to more than 20 million people. E-tax administration contributed to identifying hidden tax sources, leading to a broadened tax base in general. Along the same vein, tax revenue has increased among the major sources of tax revenue. For instance, VAT revenue has increased fourfold since 1996, from 16.8 trillion Korean won to 71 trillion Korean won in 2021. Likewise, the global income tax revenue increased by 4 times as well, from 4.5 trillion Korean won to 18 trillion Korean won in 2021. In conclusion, institutional reform and technological innovation for better tax administration enhanced our efficiency, accuracy, and transparency. The fair tax system established upon the better tax administration ensured voluntary and faithful tax filing, as well as enhancing public trust in tax admin. Lastly, for future development, these 4 areas are on the rise to continue this journey of tax reform in Korea. Thank you for your attention. Now President Kim will come back in a minute for some last remarks.